The decision by Warren Buffett and his Berkshire Hathaway to reduce their stake in Apple in 2024 has caused a stir in the investment community. This event has raised many questions about the reasons for this decision, the prospects for both companies, and what lessons can be learned from this experience. Berkshire Hathaway is one of the world's largest conglomerates, led by legendary investor Warren Buffett. The company has a diversified portfolio of assets including insurance, Geico, railways, BNSF Railway, energy, manufacturing, and significant investments in publicly traded equities. Buffett is known for his long-term investment horizon and for selecting quality companies with sustainable business models. Berkshire Hathaway Inc. is an investment holding company founded by Warren Buffett in 1965. The holding company is known for its long-term investment policy and its focus on stable and reliable companies. As of 2024, Berkshire Hathaway has $1.07 trillion in assets, $865 billion in market capitalization, $561.3 billion in equity at the end of 2023, $364.5 billion in revenues, and $96.22 billion in net income. The company is managed by an experienced team led by Warren Buffett and his long-term partners. The company manages a diversified portfolio of equities, private companies, and bonds. Some of its largest investments include Geico, Burlington Northern Santa Fe, Apple, Coca-Cola, and many others. Berkshire Hathaway is known for its conservative and pragmatic strategy in selecting assets to invest in. Berkshire Hathaway has been selling large stakes in Apple for several quarters between 2023 and 2024. According to financial filings, the holding company has now reduced its stake in Apple by almost half, having made more than $100 billion in profits from its 7-year investment in the tech giant. The sales were part of the holding company's strategy to increase its cash reserves and diversify its portfolio. Apple is one of the world's largest technology companies, renowned for its innovative products. The company has a complex structure that includes both manufacturing and services. Apple's production cycles are distributed around the world. Design and development are mainly concentrated in the United States, component manufacturing in Asia, China, Taiwan, Japan, and final product assembly in China. Founded in 1976, Apple Inc. has become one of the world's leading manufacturers of technology, from personal computers to today's iPhone smartphones. In recent years, the company has actively diversified its business into services such as Apple Music, iCloud, and the App Store. Apple's capital structure in 2024 will continue to include major investments in research and development, manufacturing, and services. However, the majority of the company's revenue still comes from smartphone sales, although there has been a significant focus on other areas in recent years, including wearables, smartwatches, and accessories. The structure continues to shift towards services, App Store, Apple Music, iCloud, which provide more stable and predictable revenue than device sales. Localization of component manufacturing and assembly of Apple smartphones includes the US, China, Taiwan, South Korea, India, and a number of other countries. In recent years, the company has tried to reduce its reliance on China, but efforts to shift production capacity to India in 2024 have faced challenges, including high infrastructure costs and staffing issues. Apple's dividend policy is stable and pro-shareholder. Apple actively pays dividends to its shareholders. The company has increased its dividend every year since 2020. The dividend was 82 cents per share in 2020, 87 cents in 2021, 92 cents in 2022, and 96 cents per share in 2023. The dividend was also increased in 2024, which continues to draw investor attention to the company. Apple is also actively pursuing a share buyback program, which is helping to increase the value of the remaining shares and keep the share price high. In 2024, the smartphone market remains highly competitive with several major players including Samsung, Xiaomi, and Apple. Apple remains one of the leaders, but in some markets, e.g. China and India, it faces unprecedented competition from Xiaomi, which has overtaken Apple to become the second largest smartphone vendor in 2024. Globally, Apple's smartphone market share remains in the 18–20% range, but with increasing competition and lower growth in certain regions, its position could come under significant pressure in the coming years. Apple continues to face challenges in terms of geopolitical stability. The company has been actively trying to move some of its production to India, but this initiative has faced several challenges. These include inadequate infrastructure, high labor costs, and political instability in some regions. In addition, the ongoing trade wars between the US and China are also impacting Apple, as the company relies on Chinese supply of components and assembly facilities. Risks associated with a potential deterioration in US-China relations could adversely affect the company's business in the future. Berkshire Hathaway, despite the continued growth of Apple's stock in 2024, has assessed the risks that exist, primarily related to global foreign policy and economic instability, conflicts that could negatively impact the company's supply chains, Apple's dependence on external supply chains in China, India, and a number of other countries, intense competition among manufacturers in the marketplace, regulatory risks related to changes in regulations, and increased tax burdens on capital gains. Berkshire Hathaway's reduced stake in Apple is due to a desire to reduce the concentration of assets in one sector and potential negative impact on Apple's business. Warren Buffett is known for his phenomenal ability to analyze long-term risks. In 2024, he may have considered the risk of a change in U.S. tax policy, which could become relevant in 2025 with the arrival of a new U.S. administration in the White House. Warren Buffett may have considered Apple's stock to be overvalued relative to its fundamental value and foreseen the possible consequences for Apple's overvalued stock in the current environment. Forecasts for Apple in 2025 include a potential slowdown in iPhone sales growth, including due to the iPhone 16 debacle, as well as potential changes in U.S. tax policy that could negatively impact the company's profitability. In a highly competitive smartphone market, Apple is likely to struggle to maintain its leadership position. Warren Buffett's long-term strategy, based on careful analysis of risks and opportunities, has proven effective over decades. In selling Apple shares, he likely took into account global economic and political risks, as well as tax changes that could affect the market in the coming years. The strategy of risk mitigation and asset diversification in the face of uncertainty seems sound. For example, Warren Buffett's systematic selling of Apple shares became a very significant event of the year for all market participants. And one must assume that the guru never makes rash and impulsive moves. I hope we will all realize this very soon. It won't be long now. Don't forget to subscribe and vote a thumbs up for our videos. It keeps us motivated to make such videos for you.